Another Monday evening is here again and time for Business Live. Hello, good evening and welcome. My name is Emmanuel Abuaji Viafe. Coming up in this evening's edition, reports say global markets have skidded in the fallout from UK's June 23 referendum as Standard & Poor's record $2.8 trillion wiped off global equity markets. Meanwhile, head of EU delegation in Ghana assures negotiations with Ghana towards signing the Full Economic Partnership Agreement, EPA, will not be affected despite UK's exit. And a new report by accounting firm KPMG says the performance of the economy will worsen this year as compared to 2015. So those were the headlines for this evening's edition. You can get interactive with us. We are on Facebook, Joy Business, and also Twitter. Our handle is Joy Business GH. You can tweet to us and also get more information on business by logging on to www.myjoyonline.com/business. We bring you the details right after this.
Business Life Today is brought to you by Ghana Commercial Bank.
Thank you very much for staying and welcome back to Business Live. In our very first story, Britain's exit from the European Union, dubbed Brexit, is not expected to affect the financial investment sector, at least in the short term. That's according to the acting managing director of the National Trust Holding Company, NTHC, Francis Apanka. He attributes this to the weak link between the Ghanaian and global markets, but admits a possible impact in the long term. Speaking to Joy Business at the launch of the 40th anniversary of the NTHC, Francis Apanka also stressed that there is no reason why investors should withhold their investments as a result of upcoming election. Well, meanwhile, the impact of Britain exiting from the EU continues to affect countries worldwide in diverse ways. Reports say global markets have skidded following the unexpected result from the June 23 referendum. According to Standard & Poor's, $2.8 trillion wiped off global equity markets last Friday, the biggest daily loss ever. Markets in the mainland Europe were hit the worst, with Milan and Madrid each down more than 12% for their biggest losses ever. Last Friday, the FTSE 100 index in London fell more than 8% before regaining some ground by mid-morning. The Bank of England has, however, assured it was monitoring developments closely and would take all necessary steps to support monetary stability. Well, to get a clearer picture of the current happenings in London and the impact of the investments in Africa, we are joined by Russell Patmore from the BBC to tell us more. Now, Russell, good evening and welcome to Business Live.
Good evening to you.
Now, so what do you make of all these happenings? I mean, the exit from the EU affecting the stock markets globally. How is it happening there?
Well, I suppose the bottom line is financial markets just really hate uncertainty, and that's what's been created by this so-called Brexit, a British exit from the European Union. Do remember, the exit has yet to take place, and we're hearing just in the last hour that the leaders of Italy, France and Germany have declined the opportunity to discuss formally or informally any discussions with the UK ahead of the official decision to exit.
Now, so what will be the status of bilateral agreements signed by the EU, which included the UK then at the time, and other African countries now?
The bottom line is that the British find themselves in a situation they need to renegotiate all of those trade agreements. Remember, they were originally put together by the European Union as a whole, including the UK. Now, we've heard the World Trade Organization already warning the British that they might have to renegotiate with up to 161 countries. We do know that the British now find themselves in uncharted territory. This is somewhere we've never been before. Sure, a lot of people will tell you roughly 30 years ago, Greenland left the European Union, but that was very, very different to this. One of the world's largest economies is going to stand alone outside this large political and economic club. Now, as I've said, the leaders of those three countries, Italy, Germany, and France, have said they won't negotiate officially until the British put in place this so-called Article 50. This is the exit mechanism under the Lisbon Treaty. Until that happens, there'll be no negotiations. And when that does happen, the British then have 2 years from the date of putting that mechanism in place to leave the EU. Uncertainty is the bottom line, which is, I suppose, affecting a lot of the minds of foreign investors in particular. These investors who manage billions in pension funds here in Europe, who invest in the stock markets, those who might be invested in Ghana, are wondering now what to do. There is, I suppose, a lot of uncertainty, and there's been this huge bump in the road. We're seeing, as I speak, the financial market in New York again lower because of these events in Europe.
Yeah. Now, Russell, so what is going to happen to the bilateral agreements that have been signed together with the UK when they were in EU? What happens to them now?
Well, do remember, any agreements that Ghana, for example, or any other African nation made with the European Union are still in place. The trouble is, they're not in place for the UK. Now, I've often said that if the UK got to a situation it decided to leave the European Union, from an African perspective, suddenly all those nations in Africa, including Ghana, would lose a friendly voice at the negotiating table in Brussels. That's the situation that the African authorities find themselves in now. Quite often, when agreements will be put on the table, like, for example, agriculture, the idea will be to protect developing countries. The UK does invest something like 15% of the development funds which the European Union then would put into countries in Africa. Now the UK will not be putting that money in, so countries in Africa will find themselves affected by that. And the UK, will it suddenly start looking inward and be more isolationist? Will it not take part in the global economy, having the global influence it did in the past? Will the relationship with Africa change dramatically? And when you talk about all those trade agreements, I suppose, in theory, the bottom line is they no longer apply to the UK. So countries in Africa will have to somehow renegotiate with the UK. Of course, do remember, somehow or other, the British might obtain some agreement with the so-called common market, the single market of the European Union. Even though they're outside, they may have the same arm's length relationship that Switzerland or Norway has, countries which are not members of the EU, but nevertheless follow a lot of the rules of the club and therefore get a lot of the benefits, including those trade relationships with other parts of the world. I suppose many African countries, Ghana included, will look to the situation with the UK and think there's perhaps an opportunity, but also the hurdles along the way.
Now, Russell, so you tell me, I mean, will membership of the Commonwealth give those countries any leadway or headway for them to renegotiate their deals?
This is something that I suppose countries in Africa will try to use now, the political leverage of the Commonwealth, to make sure that the British government is very well aware of its ties with Africa going back to those colonial days. Let's remember that ever since independence, Ghana has maintained that friendly relationship with the UK, and the Commonwealth will reinforce on the British government and the British people that there is this huge club there which can't be ignored, and ultimately when the British make their own way economically and politically, that they still have friends in the Commonwealth, and therefore any trading relationships will actually be reinforced by those ties with Commonwealth countries. It's very likely, I think, that the Commonwealth will have an influence, perhaps a greater influence than it did in the past, over the future of the UK.
All right. Now, Russell, do you have any, we are picking some rumors that the British Parliament may reconsider Brexit. Do you have any confirmation to that effect?
Well, there's been a lot of talk here about how Brexit, or the British exit from the European Union, could lead to the breakup of the UK. Do remember the people of Scotland, who not so long ago had their own referendum on independence, which did not go through. They decided to remain part of the United Kingdom. Well, Scotland as a whole voted to stay within the European Union. The same would apply to Northern Ireland. So what do these regions of the UK do? We know the Scottish leadership, the Scottish National Party, the SNP, are already looking to the prospect of going to Brussels and saying, look, we want the status of Scotland maintained within the European Union. There's a difficult political mess to be sorted out here, as well as a lot of economic challenges. The possibility of a second referendum, well, Ireland did it twice, I seem to recall, when, from the point of view of a lot of outside observers, Ireland did not come up with the right result that meant it harmed the future of the European Union at the time over the Nice referendum and the Lisbon Treaty. So maybe the British could go back to the polls, but right now I think that's very unlikely. We have a very messy situation within the UK. The opposition Labour Party very much divided. The shadow cabinet of the British leader of the Labour Party, the opposition, he's been losing a lot of the people in position, having to reappoint people in his shadow cabinet. We're going to see a new British Prime Minister before the first week of September. So the ruling Conservative Party also find themselves in a bit of a disarray over what's happened, where a lot of people, of course, were supporting one side, others supporting the other. There's a political mess in the UK that needs to be resolved pretty quickly before any final decisions are taken. It does seem, though, at the moment, the chances of any second referendum are quite remote, I think, despite what a lot of those people who didn't get the result they wanted actually are seeking maybe another rerun. The bottom line is it's politically very difficult to have another referendum.
All right, thank you very much, Russell Patmore of the BBC. That for a time, that was Russell Patmore of the BBC telling us more about the UK Brexit and the referendum that led to the exit of the UK from the European Union. Meanwhile, an investment analyst, Samson Akligo, has also been sharing his thoughts on the Brexit on investments in the country.
I think we need to watch. The first one, in the short term, is that I think that we are exposed to the British pound, and because of the Brexit, we're going to see the pound weakening. So immediately, when you take away commodities, of course, you're going to have a mixed reaction because gold is a safe haven, and when it comes to cocoa and oil, you can see clearly the reaction. But what is key for us is our terms of trade. You would observe that when it comes to Britain, we are exposed to them in terms of imports. In terms of the trade of terms dynamics, they're going to have an advantage because the pound is getting weaker. But again, for our exporters, of course, they are going to face a more uncompetitive environment, and of course, the central bank should be able to get us to adjust to that. So the short-term effect really is going to be seen through the currency. But the other element is that when it comes to terms of trade, the adjustment is a bit slower. So it gives a lot of room for the central bank to actually engage the key players in that direction. The other thing is that our financial markets, quite frankly, the adjustment is not going to be immediate as well, unless it goes significantly through the dollar. The exposure of the financial market directly to the pound is not very strong because of the way our markets work. Now, the last thing, which is very important, again, is about the concern about UK growth and fiscal adjustment. Again, we must be very careful because if they have to do tax adjustments, if they have to look at public finances in the UK, it is going to sincerely affect Ghana in terms of foreign aid and the work of some of the development institutions. And again, we have been told that it's not going to affect us through direct UK support to Ghana. That is quite significant, but it's also going to go through the UK support through the EU.
Now, negotiations with Ghana towards signing the Full Economic Partnership Agreement, EPA, will not be affected despite UK's exit from the European Union. That is the assurance from the head of EU delegation to Ghana, William Hanna. George Yafe has more.
The United Kingdom over the years has been the favorite destination for goods coming from Ghana. For instance, the country earned over £1 billion in revenue in 2014, from exports to that country. Therefore, for some analysts, it's not surprising that the recent decision by a majority of British nationals to vote massively to exit the European Union has got a lot of businesses in Ghana here thinking about the status of the dealings with the UK when it comes to their exports. Some have also argued that looking at the trade relations and volumes of trade with the UK, it is likely that Ghana will abandon discussions on the Economic Partnership Agreement with the EU in order not to miss out on the UK market. But head of the EU delegation to Ghana, William Hanna, says this will not happen.
The United Kingdom remains part of the European Union until such time as these negotiations start and are concluded, and it could take some time. So I don't see any implications at all for the Economic Partnership Agreement. We will continue as before. The basic arrangements that we have put in place, in my opinion, those will continue. We'll continue the negotiations as before, and then we'll have to see further down the line. But I personally foresee great changes there.
Sources close to the EU have indicated that it could actually take about 2 years for the UK to actually exit the economic and political grouping. So firms in the country that export to UK should not be worried about a sudden disruption to their business because of this development. The Economic Partnership Agreement currently guides Ghana's trade with the EU. It ensures that Ghana can export 100% of goods and services to that market duty-free and quota-free.
Now, away from Brexit, the Centre for Economic and Business Research, CEBRE, is pushing for the country's power distributor, ECG, to be completely privatized. The Kumasi-based policy think tank believes that this is the only way to improve the company's fortunes sustainably. A team, including expatriates, began a detailed revaluation of ECG's fixed assets last week after President Mahama's recent justification of government's decision to privatize the company. CEBRE says the concession agreement, which will see government take over the management of ECG from a private investor after 25 years, will not be prudent. Executive Director of the CEBRE, Gordon Newlove-Asamoah, blames the current financial and operational woes of the ECG on political expediency.
If I'm going to invest my money, I have to invest for a longer period so that I can get returns on it. Now, assuming that within the 25 years, the private sector is able to turn around ECG and it's now profitable, you give it back to government who is inefficient in managing the ECG, and within some 3 years, it will go back to the problems that we are facing now. So there's no point, let somebody turn the company around and give it back to government to mismanage it again. So for us, we propose that if government is going for partnership, private sector participation, it should be a permanent thing so that they continue to run the organization on permanent basis so that it doesn't revert back to government for government to come and now interfere, appoint the incompetent board and so on and so forth again. Government as an institution is not efficient in doing business because at any point in time, government is interested in the next vote, in the next election. So policies that would let the government win election is what they will pursue. But they will not pursue business policies that will lead to the organization growing and making sure that they are producing at cheaper cost in the long run for the consumer to benefit. So they may end up employing more people that they don't need. So for instance, if they need like 1,000 people, they may employ about 2,000 people because they need to get job for the boys. And all these things go to increase the cost of operation for ECG. And you and I have to pay through the bills. So when we have competent people on board as private individuals, they know that bringing in so many people that we don't need will increase costs, and that will go against our investment. Therefore, we make sure that we only employ people that we need.
All right, so we're taking a short break here. There's more ahead. Don't go away.
Business Live today.
We're still on Business Live, and it's now time to go to the stock market. Bertha Atubiga has joined me right here. Bertha, good evening.
Yeah, good evening.
So what's up on the stock market?
today's market was not that bad, but before that, let me just brief viewers on what happened on week basis last week. The composite index actually went up marginally comparing to week open level. It went up by 0.17%, and then we saw the financial stock index actually come down marginally as well by 0.24%. So the year-to-date returns for the major indices on the stock market actually closed last week at negative 10.99% for the composite and a negative 14.35% for the financial stock index. So you could say that there was this inverse relationship between these two indices on the market. The market cap also went up by 391.02 million Ghana cedis. We saw more volumes of shares trading as compared to previous week. Okay. Over 352.09% shares actually traded comparing to previous week, and the value also went up by over 1,000%. Last week was a very good week, despite the fact that we had more equities losing as compared to the gainers, but on the average it was a good week because we saw more volumes of shares trading, and FMO actually traded very huge volumes of shares last week. So we saw it adding 50 pesos to its week open price of 8 cedis to close at 8 cedis 50 pesos per share as the absolute top gainer on the market. Okay. And we also had Aluwex lose 2 pesos after releasing its financials. Its full year for 2015 financials were released last week, and we saw the price of Aluwex actually come down by 2 pesos to close at 9 pesos per share. And from the beginning of the year till now, Aluwex has lost it has lost about 7 points, more than 10% of its share price on the market. And when you look at the financials, earnings per share went down, their assets went down, and then we also saw them recording a loss of about 14 million in their financials. So definitely that's what happened last week. But today we saw 3 equities moving. EGH went up by 3 pesos and it's closed at, it's added 4 pesos, it's closed at 6 cedis 40 pesos per share. Previous share price was 6 cedis 36 pesos, and it traded only 300 shares. And we saw,
let's look at the currencies and how the Ghana cedi fared.
Okay, let's say on a week-on-week basis, the cedi actually gained to the dollar but lost marginally to the pound and then the euro. But when you look at the current performance, it's possible that the demand for dollar is going to be more than the demand for other currencies, and we're going to see the cedi actually stabilize a little against some of these currencies as compared to the dollar. And the dollar has been appreciating marginally. Even today, when you look at the quotes of the dollar, the average quote is around 3.90 cedis. It means that the forex market or the black market could even be higher than that. So that's the current state of the cedi.
Now, the global markets, in front, we know that the Brexit has impacted so much on various markets. Has it had a toll on Ghana?
Well, if you look at the relationship between the Ghana Stock Exchange and that of the exit of UK from the EU, I wouldn't say it has a direct relationship with the UK, but it has some relationship with the EU. So we are not going to see the significant impact directly on our markets like we see with other markets that actually have some core relationship with or connections with the UK economy. But you look at our markets, the way it's even performing currently, and even the performance last week after the news came out when the votes were going in place, and even today's market, you could see that the relationship is not that tight. But when it comes to the local currencies, maybe the cedi against the pound, that is where we see much relationship.
All right, thank you very much.
You're welcome.
Beta. That was Beta Atubiga, a stock market analyst. Now, we expect the performance of the economy to worsen this year from 2015. That's the view of a number of finance officers of the organizations in Ghana. Now, as captured in a new report by accounting firm KPMG, partner advisory of KPMG, Andy Akoto, has been speaking to my colleague, George Yafe. That will be on interview for the day.
Interview of the day is brought to you by
EcoBank, the Pan-African Bank.
Still protracted challenges, facing business and economic environment. And for that matter, it's anticipated that, concerns, challenges will remain or persist. If you take, for example, some of the key economic headwinds that are confronting businesses right now. We are talking of falling commodity prices. We are talking of volatility in the exchange rates market. We are talking about persistent inflation and high fiscal deficits. I mean, all these things are issues that businesses have to grapple with. And so it's understandable if, CFOs will express some of these, if you like, less than positive sentiments. Most business decisions are informed by the kind of returns that these businesses expect to make. You talk about the energy sector, very, very critical. In fact, around the African sub-region, for example, these challenges are not limited to Ghana. And that's why, for example, there has been such initiatives such as the West African Power Pool, to enable the various countries to share experiences, share strategies, in order to, if you like, ride out this very, very critical element. Energy is fundamental to economic transformation and in industrial progress. The more it becomes an issue, the more it bedevils the bottom line of various enterprises. And so it is absolutely critical that the managers of the economy give it a lot of focus and attention in order to help bring, costs down and also allow the various businesses to earn decent returns on their investment.
All right, so this is where we draw down the curtains on this evening's edition of Business Live. You can always be a part of the program by posting comments, suggestions, whatever you use on Twitter. The handle is @JoyBusinessGH, and on Facebook, our page is Joy Business. You can also get more business news updates on myjoyonline.com/business. My name is Emmanuel Abuaji Yafe. Join again, same time tomorrow for another interesting package. Good evening.